All right, Sandeep, thanks for that. Well, we have Mayuresh Joshi who also joins into our conversation, and we have been in conversation with Mr. Tulsian, Ashwini Gujral and Sudarshan Sukhani as well. Gentlemen, the last half an hour of trade, Mr. Tulsian, the space to be in this afternoon once again is sugar. So, all your names, Bannari, Dhampur, Andhra, Sri Renuka, Bajaj Hindustan, all up 10-15% today. If someone has missed out on the sugar rally completely up until now and wants to take a fresh call on sugar, what would your view be?
See, Sonia, firstly, those who are taking a call on the sugar stocks need to have conviction that the things are going to be very good for the next season as well. Because I have been calculating the production of the next season, that is the season which will start on 1st October, and I was stunned to take up estimated production of less than 200 lakh ton. If you recall, Narendra Murkumbi, when came on the channel about a week back, he said that the production is estimated at 230 lakh ton. But obviously, these kind of figures are not going to be discussed and spoken by the trade body, that is ISMA, or maybe the sugar mills, or maybe the government. So situation is going to be seen quite precarious. Now in the current situation, the worst affected, the drop in the production will be seen in the Maharashtra and Karnataka. And if you see the status quo production in the Andhra and Tamil Nadu, so I think in this scenario, if you really want to take a call, then if you take a call today, practically I think about 25 stocks are hitting upper circuit. You have seen Dalmia Bharat Sugar just hitting 20% circuit maybe 10 minutes back. Since morning we have been seeing Awadh Sugar, Upper Ganges, Ugar Sugar and so many other stocks, Dhampur Sugar, they are all hitting upper circuit. And if you see, the theme has been that UP-based sugar mills which have been holding the inventory, where the unrealized gain is anywhere between 100 crore to 400 crore, depends on the quantity held by them. The results of Q1, that is June quarter and September quarter, are going to be bumper because of the unrealized gain which will be get booked in these 2 quarters. So keep a faith on for these 2 quarters from profits to come from the inventory held by these mills, especially the UP-based sugar mill, and then thereafter the more positive outlook on the sugar season which will start in the month of October. So if you go by this thesis, or if you take a call on these basis, then probably I think at least in today's market you only get 2 stocks, that is Balrampur Chini and Triveni Engineering. Both are up by about 8 to 9%, but at least both are quality stocks where the sugars are held to the extent of about 60 lakh back by Balrampur and 40 lakh back by Triveni Engineering. So at least you have comfort that production is going to be maintained for next season, and margins is going to be seen quite good even for the next season as well. So in the current situation, I won't be jumping for, because there is a lot of left out feeling amongst the people, and that's why they are running for any kind of sugar stocks without taking a fundamental call on those stocks. But in the current situation, because other stocks are hitting, have already frozen on the upper circuit, I will advise you to buy in these 2 stocks, that is Balrampur Chini and Triveni Engineering.
Oh yes, both Balrampur and Triveni have been recommended by Mr. Tulsian from much lower levels, and both these stocks now at new highs right now. Ashwini, the other stock that you recommended that you thought bottomed out at 720, Sun Pharma, phenomenal move yet again on that stock, up about 2.5%, and again a stock where there was perceived bad news in terms of buyback being much lower than the expectation, but the stock's moving on.
See, stocks bottom out when all the sellers are done, and often buybacks, whatever the price, they tend to happen because management has the best idea of where a stock is. And today overall, pharma has done very well. So Aurobindo Pharma seems to have bottomed out. Biocon, similarly Sun Pharma, I think it should hit 870 to about 900, and that will be when good news happens. But definitely the indications are that 700, 720 is a strong bottom for Sun Pharma.
Okay, well, that's on Sun Pharma. That's picked up quite a bit from the lows. Mayuresh Joshi is also with us to track the fundamentals. Mayuresh, hi, afternoon. So many stocks hitting fresh highs. I want to pick up 2 of them, Escorts and Exide, from the auto and auto ancillary space. Would you put incremental money in either of these names?
Afternoon, Sonia. I think if you look at how the trajectory has been for the Indian markets, and if one really assumes the volatility to continue because of the Brexit uncertainties, you're probably looking at the Indian domestic scene probably getting back into the highlight zone. Having said that, probably I think if the monsoons are much better than what one really expects, a lot of these farm equipment manufacturers ought to do well. So whatever we've seen degrowth in terms of volumes over the past 2 years, the base A should work favorably in favor for them. Secondly, I think with the kind of volume uptick that one really expects to come through over the next few months and quarters, both in terms of the farm equipment side as well as on the construction side, because the infra activity is expected to pick up meaningfully over the next 2 quarters, you might see meaningful uptick happening on the volume front, which would lead to operating leverage happening. So yes, I think farm equipment as a space should do well. And on the auto ancillary part, when it comes to batteries, my own sense is that if the 7th pay commission recommendations are out, you're probably going to see further traction happening in terms of how two-wheeler volumes are expected to grow. You're seeing healthy competition in terms of how the PV market is shaping up. But again, I think expectations are largely built in that the volume growth for the better part of FY17 on the four-wheeler side should be good as well. So yes, I think if I have to take a call in terms of valuations for Exide or even Amara Raja for that matter, I think these companies are poised for a meaningful 16-17% revenue growth. The EBITDA margins probably should be maintained. We've seen some amount of uptick happening on the input cost side. But again, I think the earnings should largely get stabilized over the next few quarters. So you have to have a 15 to 18 month view. Yes, I think I would maintain a positive view on the battery makers as well.
Okay, well, we'll come back and chat about some more stocks. But in the meantime, let's do one thing. Let's take a short break. We will come back for the last 20 minutes of trade. As we take a break, let's give you some amount of information on how you should approach the markets from here. Let's listen in to what Prashant Jain has made of the market mood post the Brexit. When we also come back from the break, it'll be time for Midcap Mania with Nigel D'Souza. Stay tuned.
We have had a very, very long period of consolidation. In Jan 2008, Sensex was 21,000. Today you are at 25,000. So 8 years, 20% returns. So I think the market cap to GDP of India has corrected to near all-time lows. So currently the market cap to GDP of India is at 60%, which was experienced at the peak of the Lehman crisis, at the bottom of the markets. So there is no crisis today, but your market cap to GDP is touching crisis levels. So I think fundamentally Indian markets are undervalued, and how long this period of consolidation will last, I don't think anyone can give you a correct answer, but I don't think it will be too long.
Well, don't be fooled by the headline index. There is so much action beneath the surface. The stock that's now flying off the shelf is Dhampur Sugar, 17.5% higher, and that is indicative of the mood in the sugar sector, which is extremely positive right now. But it's time for our Monday special Midcap Mania, and as usual, our favorite Nigel D'Souza is here to tell us about the stock that he's looking at today. Nigel, take it away.
Well, Sonia, the stock that we're focusing on today is Oriental Carbon and Chemicals. Just request viewers to really listen to the full story, and then in fact they can take a call with regard to the stock. But to take you through first, what does the stock do? They're the sole domestic producer of insoluble sulfur. What is insoluble sulfur? That in fact is the product that's used as a vulcanizing agent. That means that when you want to convert natural rubber into a product you want to use, this is really very, very important. If you just take a look at natural rubber, you'll require around 1.5 kg of insoluble sulfur when in fact you're using around 100 kgs of natural rubber. So that's really the background of the company. In terms of global production of tires, you'll see that that's likely to grow by nearly around 20%, 22% in the next few years. That would mean that in fact you require close to around 28% of insoluble sulfur. So that in fact is the consumption story. That's a tire consumption story. Let's pull up the next plate. It will tell you that the demand of insoluble sulfur will be nearly around 28%. So no big supply demand mismatch there. In fact, there'll be more demand for insoluble sulfur. Moving on then, there are only 3 big players currently. The big one is from the United States. That in fact it's Eastman. It has 80% market share, and we have OCL that has 10% of the market share, and that's another Japanese company that has another 10%. So only 3 big producers internationally. Now OCCL has planned a capacity addition, and that's what will take their capacity from around 23,000 units currently all the way to around 34,000 units. So in the next few years, in fact, that's what the capacity addition will look like. They were only around 5,000, they became 12,000. Now, in fact, they're looking to up it to around 34,000 or thereabouts. The key reason, really, Sonia, why they want to do this is because radial tires, they require more amount of insoluble sulfur, so that they could capitalize on that. They can also look at the North American market where they haven't really capitalized till now, and also there are high entry barriers, so that as well will favor them going ahead. Looking at the financials in the last year, there was a bit of a dip on the top line, but the margins were maintained. Some of that is really a crude derivative, so that's why in fact there was a dip on the top line. Crude prices fell, that's why realizations got hit, but margins were maintained. Profitability though was nearly around 50 crore rupees. So just to derive that, the stock currently is trading at nearly around 10 times its trailing earnings. 50 rupees, stock is at around 500 rupees or thereabouts. We just had a plate as well of their big customers, so all of them really, almost all global tire makers, they do take insoluble sulfur from OCCL. Finally, risk, foreign fluctuation risk definitely exists because exports contribute nearly around 60-65% plus of their total revenues. Unrelated chemical diversification, that's a possibility as well, so that will not be taken very well by this trade. And finally, there could be volatility in sulfur prices as well as crude derivatives, so that could impact their margins. And finally, Sonia, you track the space very closely. One of the big global producers, that's Michelin, they in fact are not yet on their customer list, but fairly interesting stock. Keep an eye on it. Back to you.
All right, Nigel, thanks a lot for that. So that's Midcap Mania with Nigel D'Souza. But let's just focus on some of the largest stocks. Ashwini is still with us. Ashwini, it's BTSC time. I'm assuming you'll go with all buy ideas now.
I would think so, because a lot of stocks have made significant bottoms and are now rising. Hindustan Petroleum, that's a buy with a stop of 970, target of 1010. Aurobindo Pharma has completed a fairly strong correction. That's a buy with a stop of 718, target of 750. And the PSU Bank sector is up about 3%. So Bank of India is a buy with a stop of 96. You look for targets of 108.
Okay, let's get an insight into what's happening in the dealing rooms a weekend after the big Brexit. Nimesh Shah is here with Trader Talk. Nimesh, have the dealers forgotten about the big event, or is there still some amount of caution?
Well, there is still some amount of caution for sure, Sonia. You know, if you look at the markets, it's pretty much flat. The volumes are on the lower side. That explains that the larger participation is still missing in the cash flow, at least in the cash market. You know, the general sense is, I guess this Brexit concerns will take some time to taper off before big money is committed for EMs of an Indian market. So that's something we have to closely watch out for. However, having said that, there is a lot of action in the mid cap and small cap. I guess it's largely the trading desk, which is the retail trading desk, which is very active in the mid caps and small cap space. So it looks like, well, the Nifty and the Sensex are range bound. You might see this highlighted activity in the mid cap and small cap to continue at least in the near term. Within the large sectors, IT is one sector which is under pressure, largely on the back of Bank of America Merrill Lynch cutting the price targets for most Nifty technology stocks. Apart from that, most of the brokerages seems to be a little worried about the Brexit concerns on the earnings of IT companies. So that is a sector as standard for punishment, and arguably so. But if you look at the global opinions, two things clearly stand out, Sonia. One, now most of the large brokerages do believe that the Fed is not going to hike rate at least till December. So at least that is out of the window of June or a September hike by Fed. The other big thing is most of the brokerages do believe that EMs per se is in a sweet spot, and any correction should be an opportunity to buy. So it looks like the dips will be bought, but for now there is a bit of caution out there from larger institutions. That explains the cash volumes, and there is a buzz as well of a possible basket selling in the late trade. So maybe that explains that the upside is capped at least in the near term. But as I said, while the Nifty and Sensex looks pretty much flat, there is a lot of action in the mid cap and small cap.
Oh yes, Nimesh, there is quite a bit of action in the mid-caps. In fact, the mid-cap index is going to go home with 1% rally, and look at the advanced decline ratio, 4:1 on closing. That really has to go down as one of the best advanced decline ratios that we have had all through the year. Forget about pre-Brexit or post-Brexit. But Varinder also joins in now, and he'll tell us about some more buzzing stocks. Varinder?
A lot more buzzing stocks. I'll start with the small cap gainers. Technofab Engineering up 20%. Gwalior Chemicals, huge volumes today, up 20%. ARSS Infra, PG Electro Fluoroplast, Fairdeal Filaments, Nitco Tiles gaining nearly 50% the last 3-4 days, HOCL, Goldium, Murdeshwar Ceramics, Modern Dairies, Prerna Finsafe, that stock has been just gaining in the small cap space. Podar Pigments, Tara Jewels, Allsec Technologies, huge volumes today. Giant Agro, Garwale Poly, BSL, Ketan Chemicals, Porwal Auto, Gammon India, Imabe Infra. Almost all the sugar stocks are up over 10%. Dalia Bharat Sugar, Dwarikesh, Andhra, Upper Ganges, Rana Sugar, Shakti Sugar. In the mid cap, you are seeing all this, NBFCs gaining, huge today. So look at Satin Credit Care up over 8%. Muthoot Capital Services gaining over 5%. Some of the shipping companies like Marketer, CMAC doing well today. Cement is clearly active today. And in the mid cap, you will find Birla Corp. That stock was up by nearly 8%. And some of the chemical companies like GHCL, JB Chemicals, Agri Company, Monsanto is buzzing. Biocon, of course, you have been mentioning. Shrey Infra, TNPL, Suvain Life, other stocks are gaining in the mid cap category.
Okay, Varinder, thanks for that. Well, we shouldn't lose sight of the fact that global markets are under pressure this afternoon. The DAX, the CAC, the FTSE are all down about 1.5%. And let's take one look at the Dow future, shall we? Because that will give you an indication of whether there's more volatility across the global markets that is left. For now, the Dow futures are just about flat. At least that's what I saw the last time. But let's see how they're shaping up currently. Okay, down 0.5% now. So there could be some volatility underway. But as we count down to the last 10 minutes of trade, Amrish Baliga also joins in. Amrish, hi, afternoon.
Good afternoon.
The space that's doing the best this afternoon is PSU banks, and that's been your favorite for the last fortnight.
Yeah.
Can one still buy SBI and BOB?
From a trading point of view, yes, because we should remember that these stocks have already moved up decently well. So from the momentum point of view, yes, but then I would look at buying these again on a correction, because the markets are going to be volatile. We have seen that in the past couple of days. I think that's the way it's going to be going ahead also. So whenever there's a correction, I think it's an opportunity to get into PSU banks, because if you're talking of the next 1 year, I think there would be a discovery of this space again. And that's a time possibly you should get a return of about 40-50%, if not more, because the way they've been beaten down in the last year and a half, I think that possibly should be made up in the next year.
Okay, well, yes, PSU banks are the big gainers now. But Anuj, it's interesting. One day after the big Brexit event, the market has sort of moved on. If the bulls would love today's trade, because not only have we held on to Friday's lows, but we've also seen so much outperformance from the mid-cap space.
Sonia, three key takeaways for the markets from today's trade. One, that buying mid caps will still make a lot of money for you. This market has given enough evidence that right now it will require a really something bad globally or locally for this mid cap rally to come to a halt. So as of now, you are better placed not looking at the Nifty right now, but looking at individual stocks, and chances are that you'll make money. And you can easily hedge that by buying puts, which are really low in value right now. That's point number one. Point number two, the global volatility is still not out. As you were just pointing out, the Dow futures are still down. Keep in mind, on Friday, the Dow ended at the lowest point of the day. And in that sense, for Dow, today will be the important day of follow-up. So that's point number two. And point number three, and I could be wrong here, but you'll see a bit of an FII sell number today. Because if you look at the stocks where we have very high volumes, it's Infosys and TCS, both of which are heavily FII owned, and both of which have seen selling. I don't know how much of it will be compensated by other stocks where we have seen some buying interest. So yes, today will look good. But it's not going to be 1 or 2 day call that the market has moved on from Brexit. That's something that we'll find out over the next 1 week. But till then, the thesis has not changed, that you look at individual mid caps, you buy them, and you hedge yourself by buying the Nifty puts, and chances are that you'll come out on top. I think that's one lesson, or the 2 or 3 lessons that came out in today's trade.
Okay, well, we will wind down the markets. We have just about 4.5 more minutes to go, but it gives us some good time to get some final comments going. Mayuresh, the other space that's doing really well today is cement. Ultratech Cement is up 3%. You have ACC that's hit a new 52-week high today. From that space, what's your favorite now?
No, again, Sonia, I think one must understand that the domestic cyclicals, which include cement, I think are expected and poised for good growth going ahead. The demand and the volume growth that one really expects post the monsoon are anywhere in double digits for a whole host of these players. Secondly, add up that the petcoke consumption has gone up, which basically means that the EBITDA per ton for a whole host of these players have started inching upwards. Third, with utilization levels going up, with demand coming back, you will see realizations both on the white cement space textile as well as the RMC as well as the grey cement space starting to inch up, and that probably abets the realization per ton, and that trickles down to EBITDA per ton. So I think the return ratio should improve henceforth over the next 12 to 15 months, to say the least. So again, I think extremely optimistic on players like Ultratech from the large cap space. I continue to do so and keep my view over the next 12 to 18 months.
Okay, Ms. Tulsian, you had recommended some profit booking in Asian Paints once it crossed 1,020, 1,030, and you said that it would be good to wait for some correction before re-entering. It's now corrected about 6%. Good time to enter, or would you wait for some more correction?
See, Anuj, in fact, I gave the profit booking along with the Q1 numbers, and what I'm expecting that Q1 numbers are going to be disappointing, and actually at that time you may further see the stock correcting. But I'm not saying that from here on it will not rise. So those, even for the investors, those who have gone for the profit booking, I'll advise that yes, if they have a long-term perspective to hold this stock, then they can re-enter. Otherwise, wait for the Q1 results to come.
Okay, just about 3 minutes left for markets to close, so let's just do a quick recap of how things panned up. I tell you something, Sonia's list will be far more interesting, but for whatever it's worth, let me go through the large cap stocks as well. It's a flat day, which is good news for the market, considering that there was no way that we even went close to the Friday low. In fact, the morning there was minor gap down that was bought, and at higher levels there was some profit booking as well. But in terms of stocks that capped the market's gains, let me start with that list first, because that has some influential names. TCS and Infosys. TCS was down 3%, Infosys was down 2%. So that really is your Brexit impact as far as individual stocks are concerned. Apart from that, Maruti still gets a bit rattled by the yen impact, so that was down about 1%. Other IT stocks were also lower, Wipro, HCL Tech. Tata Motors, well, at least in the DVR, the profit booking continued, or the downward move continued. Tata Steel as well was a bit lower in trade. But there were a lot of stocks where we saw gains today. Pharma has really made a strong comeback. Make no mistake about that. Dr. Reddy's up 3%, Cipla, Lupin, all these stocks did well and have been doing well for last some time. And cement has made a big comeback. So stocks like Ultratech Cement, Ambuja Cement, ACC all moving close. ACC in fact is at a new lifetime high, and other stocks also moving closer. Apart from that, market got support from stocks like SBI, that was up 2.5%. What a rally it's been for SBI. Larsen & Toubro was up about 2.5%, and a couple of other names like Idea and Bharti Infratel also rallied. Some support from the bigger banks like ICICI and Axis Bank. But really, Sonia, you have the better list right now.
Oh yes, today was all about mid-caps, wasn't it, Anuj? I mean, 1% higher for the mid-cap index, and the market breadth, more than 1,200 stocks on the advancing side. If someone would have said that a day after the Brexit event, the market would be in such a positive mood, I don't think too many people have believed that. But in any case, let me tell you about all the big stocks that moved today. The sugar space was the space to be in, Dhampur, Sri Renuka, Bajaj, Rana Sugar, Triveni, Balrampur, all gaining between 8 to 15%. In fact, if you would have shut your eyes and hit a dart in the dark, you would have got it right in the sugar space. All the stocks doing well, both on volume and price run. Mercator was one stock that did very well today, almost 14% higher on that stock. A couple of these PSU banks, even in the broader markets, did well. So from the frontliners, you had SBI and BOB, and from the broader markets, you had something like an OBC and Bank of India that was up anywhere between 3 to 4%. And then you did have, a lot of stocks hitting 52-week highs. Biocon is one stock that has been just defying gravity over the last fortnight. 6.5% higher, and volumes also on that one. New 52-week high on Biocon. In fact, talking about new highs, you had names like Dabur, Exide, Triveni Engineering, Escorts, Bajaj Finserv, all up almost about 4 to 5%. So yes, the day belonged to the mid caps, and suffice to say that the Nifty just consolidated today below that 8100 mark, and it held on to Friday's lows of 79.27, which is a big positive. The global markets though are volatile, so you should keep an eye out on Europe, because most of Europe is still under pressure at this point. But let's get some final calls going before we wrap up the day's trading action. Amrish, you're still quite bullish on the cement space. What's your top pick there?
No, in fact, I've been bullish on the economy space, which included cement, it included metals, it included the PSU banks. I mean, all of them have done decently well. And I was quite cautious on IT and pharma since the last couple of months. And I was clearly negative on tires. So if you look at this whole space, we have seen some correction in pharma and IT. Tires have come down by nearly 30-35% from those highs, and cement, metals and PSU banks have performed. And I'm still quite bullish on this space because we still haven't seen that major demand-supply mismatch, and that I think we'll see clearly possibly in the next 2 or 3 quarters, and that's the time you'll actually see the margins really increasing majorly, and that's when you'll actually see some of these large cap cement names really gaining in a huge way. So I'm still bullish on Ultratech, I'm still bullish on Ambuja and ACC.
Okay, Sudarshan, at what point will Infosys become a buy for you? It's one of the strongest stocks, but of course it's going through some news-driven correction.
Yeah, it's news driven and it's also distributing. So another maybe 70 to 100 points down is when Infosys becomes a buy, not at current levels. There's probably more downside left.
Okay, what about pharma names? Anything that stands out for you, Sudarshan?
I've been talking about Dr. Reddy's. I've explained how Dr. Reddy's has been building a very strong base for almost 8 to 9 months now. That's going to be a strong outperformer not only in pharma but elsewhere also. So if you haven't bought Dr. Reddy's, buy it as a positional trade and hold on to your dear life with it.
Okay, all right, we'll take that advice very seriously, but let's try and just close this discussion with a final comment from your end, Ashwini. What should the orientation be tomorrow, given that today was not so bad for the bulls?
Well, I can't see the market being anxious at all. So let's wait for, some event which probably shows anxiety. But a market which responds well to bad news is a strong market. All sorts of declines, even if it happens again 50-point gap down, for example, tomorrow morning, again that should be bought into, because what the market is showing you is that other than one small pocket, which is IT, the rest of the market is dealing with this news flow very well. And not only news flow, the uncertainty which is coming with the news flow, because once something is out, it's useless. But also the uncertainty that is still going on, the market is dealing with that fairly well. So I believe that even though we are range bound between 80.50 and 82.50, on declines you should be buying.
Okay, gentlemen, thanks so much for joining us and taking us through the last 1 hour of trade. It may look like a nothing sort of a day, but that's not true, because there was plenty that happened beneath the surface. But let's move on from our first love to our second love. Today was a sad day for a lot of football lovers.